Just to let everyone know that anything spoken here is not financial advice. We're here just providing information on cross-chain farming, which is a great project, great team, and I'm very excited to have these guys back to talk a little bit about updates and what's been going on. Why don't you guys first off, why don't you introduce yourself, Alex, or whoever wants to go first?
Yeah. Sure. So, yeah, my name's Alex. I basically am part of the core team at cross-chain farming and D3 protocol, which we'll talk a little bit about. Largely heading up kind of marketing and business development, which is ranging across, all the typical crypto marketing stuff, but also kind of high-level strategic partnerships and investors. And we've got some exciting stuff happening there, which we can't quite share yet, but I hope to have a lot to update you guys with in the coming weeks. So yeah, that's me, background in sort of BD and marketing over the last 15 years, crypto for 5 years. Absolutely loving what we're doing with CCF, and every day it's just an absolute joy.
Awesome, man. That's great, Alex. Pleasure to have you here, man. Farmer or Shun, did you guys want to go next? Either.
Yeah, I'll go next. So yeah, my name is Krish. I'm I suppose you can call the COO of cross-chain farming and D3. So my background is in audit. I've worked at a big four audit firm, and I'm currently working for a bank which I can't really name at the moment. I've been working with the lead dev Rago, who unfortunately couldn't be on the call today, for quite a while on a few other products, and we've known each other for a little bit as well. And yeah, we're very excited to be bringing you guys updates on CCF and D3. And I'll hand over to our lead farmer, Bob.
Bob, what's up, Bob?
How you doing?
Nice to meet you, man. Pleasure.
Yeah, absolutely. So I'm the newest team member, and I unfortunately don't sound like Roger Moore or any of the Bonds like my partners here do. So I have just a stupid American accent, but I'm having a blast with these guys. I have about 30 plus years in traditional finance, about 4 years in crypto, and was fortunate enough to run across this project as an investor and got to meet these guys and kind of understood the vision. And I'm kind of the expert in yield farming and yield generation, and so we're off and running. We're doing some great things, and made some amazing trades this week, and returning value to our investors.
That's amazing to hear, Bob, and we're happy to have you. We do have Scott up here too. Scott is part of our team, and he's one of our project leads here, and so I'm sure he has a couple questions for you guys too. But Scott, did you want to say hi? Introduce yourself.
Hey, how's it going, everybody? I'm the lead of the Masters of DAOs, and happy to be here. I'm glad you guys are here for the follow-up AMA, and excited to see what you guys have to say.
Beautiful. Awesome. Well, here's I know there's going to be people watching this that don't know who you guys are and what you guys are doing over at Cross Chain Farming. Why don't we start with what you guys have built, and we'll kind of get into some more particulars. So go for it.
Sure. So cross chain farming is a kind of new project in an emerging sector called farming as a service. And in very simple terms, sometimes it's very hard for people who are either kind of new in the crypto space or who are, maybe a couple of years in the crypto space to continuously be searching for farms to kind of park their funds and gain yield. You've also got to be sure that whatever you're parking your money in is a safe farm and isn't going to rug pull, right? So what CCF was basically designed to do was, look for these farms for you, invest in these farms for you, and help to generate a yield and return it back to our token holders. Alex, I know you've got a great elevator pitch as well for CCF, so I'll let you take the.
Yeah. I mean, I think for me, it starts with the mission statement, right, of what we as a group are trying to achieve, and that expands out into other things that we'll talk about. But basically, what it is that we want to make DeFi easy, accessible, and secure for everyone. And so by everyone, I don't even mean people just in crypto. It's like anyone out there in the world that, you know, wants to get action in crypto and make returns without a lot of the risks and challenges and technicalities of it. So good example was chatting to a mate of mine, pretty much thinks that crypto is a scam and that I'm crazy. So I was telling him about cross-chain farming. He's like, look, tell me in like one sentence what it is. And I said, look, you know, what it is, you buy and hold our token. We take a share of the funds from the tax that you pay on the transaction. We take that tax and we go and farm and generate profits, and then we return those profits to you. So buy and hold, we farm, compound profits, and return to holders. That's it, nice and simple. He said, right, okay, that actually sounds really good. How do I do this? And then, of course, I had to take him through how to set up on Binance Smart Chain, which is the chain that we're on, and you know, deal with Pancake Swap, which can be a bit of a pain, to be honest. But yeah, no, that's the pitch. That's the pitch. So in very simple terms, that's what we do.
Awesome. And so you did talk about tax there. So walk us through. So is the tax on buying and buying or selling? Where does that tax come in? How much is that tax? And you already told us kind of where it goes, but maybe talk a little bit more about that tax.
Yeah, for sure. I mean, it's a nice sort of segue into where we're going, right? So the treasury tax is a part of it. And basically, you know, we've kind of come up with this model that is 3333. And actually that's kind of going to be the holding brand over all the products that we're creating. And it creates a nice balance, right? So whether you buy or sell, you pay 12% tax divided by 4 into those chunks of 3%. As mentioned, 3% is used to basically go into our treasury, which we use to farm and invest in spot positions and gain access to pre-sales and a number of instruments that we can kind of talk about. 3% goes effectively to me, not in salary, but into the marketing budget, which means that, you know, we have a constant flow of funds to promote the project. And at the moment, we'll talk about that later, but at the moment, a lot of that's organic that we're doing. So we're building up our treasury to kind of hit the next phase of marketing in due course. 3% is then returned to holders in reflections in the CCF token, so that, you know, whilst we're off doing our farming and building up the profits, you're still kind of benefiting and incentivized to hold and not to sell, because you're gaining extra CCF tokens. And then the final 3% is used to effectively control inflation and support liquidity. So on a 2-to-1 basis, 2% goes into burns, which means tokens out of supply forever. And 1% goes into adding extra liquidity to the LP to basically, strengthen the liquidity pool and the price floor and enable kind of larger trading volume to come through the token.
No, that's a great understanding of what you guys are doing. Walk us through. So you guys, the project's been out for has it been 2 months now? I can't write quite.
Yes, V1 came out late November. We did a very successful V2 migration, and now we're coming into our I suppose like our second full month of operations.
Great. And since the migration to V2, how's everything been? Has there been any kind of things going on that you guys need to still correct, or was everything addressed?
Everything perfect. Yeah, I think, you know, we were very lucky that you know, our lead dev kind of solved that inflation issue so quickly. I think it took us, you know, a couple of days, and with the help of our community, we also managed to make sure that everyone got the correct kind of one-to-one airdrop. Funny story about that. Because BSC scan wasn't actually working properly at the time, so the snapshot we took didn't actually show everyone's correct reflections. It only showed, you know, what their initial purchase amount was. So Alex and I had to basically sit there and wade through BS scan and sift through about 3600 separate profiles manually, and inputting in everyone's updated CCF holding amounts. So I think that showed everyone our kind of dedication to making sure that, you know, regardless of how things are done, we have to make sure that things are done right. And I think that instilled a lot of confidence in our community as well. And we do want to thank our community for bearing with us during, you know, those couple of days whilst we kind of sorted everything out. But I think, you know, everyone was happy, everyone got the right amount of tokens. And if you're looking at your wallet and, you know, you only see a small number of tokens, it's probably likely that you haven't added version 2. and version 2 contract is on the CCF CCF Twitter account. So you can go ahead and add the V2 contract on there.
And that's huge, guys. Just really quickly, let me speak to that, because there is another project that is kind of doing something similar to you guys, and they had issues too. But instead of doing their due diligence and helping, you know, their people, their members that own the token, they decided to make instead of airdropping and doing the right thing, they decided to make a very short window where you had to migrate your old tokens to your new tokens, and if you didn't do that, you lost everything. So I just want to say you guys did that the right way. That really helped me and a lot of my community, because I know that we were actually bought into CCF like the first or second day you guys came out. And so I just wanted to just thank you guys for doing that professionally and going through it and making sure that everyone got what they were supposed to. That's very big, guys. Appreciate
Absolutely.
it.
And I think, you know, that's the way that we like to do business. You know, we like to see, look, you know, if there's an issue with a contract, then that's on us. So it's on us to rectify it. And that's the kind of ethos that we take throughout the whole of the kind of CCF and D3 protocol as well.
That's fantastic, man. And I really feel even better about your project, knowing that you guys do care about your community, and you do everything that you can to make sure that you rectify any kind of mistakes or errors. And you guys have really shown that you guys are there for us, and I do really appreciate you guys for doing that. Walk me through, you know, I'm sure someone's listening to this and they're like, okay, what are the pros and cons of farming as a service? Can you walk us through some of the pros and maybe is there some of the cons for the farming?
Sure. So I think, you know, farming as a service, some of the biggest pros are the fact that it's not you that's spending your time kind of going off researching for hours and hours and hours, trying to find the best farms. Even if you do find the best farms with, you know, really good yields, you need to do your due diligence in terms of, you know, checking if they're authentic, you know, the contract's safe. And then you've got to understand about, you know, looking at the market volatility. You know, is there impermanent loss involved in the staking pools and liquidity pools that you're investing in? And also, you know, de-risking and de-hedging. It is a full-time job. And I think, you know, Bob and I will tell you that we're constantly looking at our portfolio. You know, we're managing it, we're tweaking it. Like today, I think we did about, I don't know, Bob, must have been about 4 or 5 trades today, just to kind of diversify a little bit off one of our main positions. So it's a full-time job, and, you know, not everyone has the time to kind of devote to doing that. So that's the biggest pro. You know, you've got people who have been doing this for a while now. We understand how it works. We understand how the market works, and we can kind of be agile enough to react to market conditions and de-risk and hedge our portfolio as and when needed. So I think that's the biggest kind of pro. Cons, I'm actually struggling to think of any cons, but Alex and Bob kind of help me out here. If you can.
Yeah, I mean, cons, like, I think it's crypto, right? And like, people have to have patience with things, right? So like, look, like, we want to do good things, and we've got loads of good things coming up that we think will move the price of the token up, and you know, that's great. And like, you know, part of the model does rely on having volume coming through to generate, you know, more funds for us to kind of farm and market and everything like that. But I think sometimes the con would be, it's not something where we're just trying to say, oh, we need this price to go to XYZ in order for people to generate returns. In fact, there's possibility that if there's like volume coming through and the price is moving up slowly or stable, we can still generate returns and pay out you know, profits to holders over time, but that's kind of on a monthly basis. So I think what we've done is originally spent a lot of time kind of educating the community, building a community organically, trying to get everyone to, you know, understand what it is that we're doing. Obviously some people don't want that and they sell, and, you know, that's fine. Or some people want to take profit, you know, that's totally fine. But I think, you know, so I guess what I'm saying is we're trying to turn a typical crypto kind of con in terms of like impatience and you know, desire for just like unrealistic pumps into a pro, where we're building this really loyal kind of holder base, and, you know, in contact with a lot of our holders who are very supportive and kind of holding out for the long term. Now, don't get me wrong, look, we got a load of stuff going on, you know, we think we're going to grow massively. I don't know. I mean, you know, like, I guess we're super biased, so it's kind of like hard to answer that question.
No, that That was good, man. That was good. I think you guys have done a really good job, as far as the team goes and explaining, what it is. It does really help out when people don't have, the extra 2 or 3 hours, in a day to do that extra research on farms and different things to make money. And yeah, everybody wants to get rich overnight. And, when you get into crypto, everyone thinks that you're a millionaire, within a week of you buying a token, but it really doesn't work that way. So, no, that was a great explanation.
So I have a couple questions.
Yeah, Scott, go for it. What you got, man?
So the first question is, so when you guys are moving money around and investing in different projects or different things, how do you guys determine which project to get into? Like, are you guys doing like a community vote in your Discord, or are you guys just saying this one looks good? Like, I think it would go a long way to the community to explain
Sure.
what your guys' thought process is behind that.
So what I'll do is I'll kind of give a brief overview, and then I can kind of hand it over to Bob to kind of talk a bit more about what he kind of looks for personally when he's identifying strategies to kind of deploy funds and stuff like that. So in terms of how we do it is, we look at ecosystems that are up and coming. We look at ecosystems that have a good community base, and that's where we'll focus on deploying our funds. So for example, we believe that Phantom is a fantastic chain. We think that's got so much potential. We think it's highly underrated, and really flying under the radar in terms of the kind of DeFi opportunities on there. If anyone has actually tried to deploy a DeFi strategy on Phantom, it's a joy. It's fast, it's cheap, it's an absolute pleasure to use, unlike some other chains which we probably won't mention. But in terms of the actual deployment of strategies and how it's determined, the CCF holders, they buy the token for our expertise, right? So we will take the lead on the strategies. We won't announce them a lot of the time, because as soon as you announce them, people start to kind of go into the farms themselves as well, and other projects look at you and they deploy funds into the farm as well, and that drastically reduces APR. So sometimes Bob can put out a few cryptic tweets about where we may or may not be farming, and then it's up to other individuals to kind of do their due diligence and make the right call. And then the way that we actually deploy it, it'll be a conversation between myself and Bob. And we'll kind of come to a agreement depending on is it the right kind of risk profile, are we hedged appropriately, but Bob, why don't you speak a little bit more about that?
Absolutely. The analogy that I like to use to kind of get people acclimated to our philosophies, think of a pyramid, and the base of a pyramid uses a lot more stones than the top of the pyramid. So the bottom of our pyramid is stable coins and generating the highest yield we can get on stable coins. That's going to be our biggest core positions. And so we'll diversify the stable coins across protocols and chains. So this morning, I actually found 2 new protocols. They're not new, but they're now offering non-leveraged stable coins with yields in 60 to 75%. So, the actual layman, for them to go find that and deploy it, it's kind of a needle in the haystack. So we're constantly working on our the base of the pyramid. We have a strong belief in stable coins and stable coin yields, because that's consistent. It's super low risk, and we're able to generate alpha there and get more than what the average person's going to get in putting their money in Coinbase and getting at 5% on USDC. Moving up the pyramid, we start to get into delta neutral strategies, pseudo delta neutral strategies, hedge strategies, option strategies, and at the very top of the pyramid, a small allocation to more aggressive, or you may call degen strategies. But I think for us, I'm kind of classically trained finance guy. The golden, kind of the holy grail is risk adjusted absolute returns. So the amazing thing about crypto is there's so much alpha. There's so many good projects. There's so much good yields. It's kind of like I tell the guys, it's like drinking from a fire hose every day. And you just have to be selective, pick the right ones, and balance your portfolio.
I feel that like that every single day.
Yeah, I mean, I think I'd just chip in on that and like put it in like, because I'm in the I'm not bad on the DeFi stuff, but I'm in the chat with these guys, and it's very complex stuff. A lot of it I don't understand, I'll be honest. And so when I look at it, it's like the power of this to me, and we're talking about the pros and cons is, when the market's pumping, everyone's making money, right? It's easy. When the market crashes, everyone gets, or most people get wrecked. And the whole point here is that we're setting up this kind of, strong base, middle layer, and then higher risk layer, so that we believe that we can kind of perform under the majority of market conditions. So actually, look, if the market's tanking, obviously CCF's likely to take a hit, but we believe that we're actually quite resilient. So even let's say there was a sideways market or a bit of a bear market, that we're still going to have these stable coin and delta neutral strategies that can still generate returns for people. So that's it. So we're kind of like hedging across a range of instruments so that we can always generate returns, and adjusting that depending on market conditions. But the other thing that we do, I mean, we've talked a lot about farming, and obviously that's where some of the expertise is. Where I'd say, like, I'm trying to add some value on that side of things is also, we are investing in spot positions as well for these kind of longer term, bigger bets. And, Chris and Bob will do a lot of the kind of fundamental and technical analysis on that as well. But in addition to that, we're now in a position, and we're going to announce a few of these in the future, but where we're getting allocations to very, very good pre-sales, which, most people will not have access to. And the benefit is that if we're getting access, that means our holders are getting access, and these, we believe are going to generate really serious returns that obviously ultimately get returned to holders. And then the final piece of the jigsaw, which we're kind of working on at the moment, is looking at other assets that are, either counter-cyclical or kind of have their own, market cycles, such as NFTs, right? So we're looking at bringing in people with expertise in that field, because obviously at the moment it's like very, very hot, right? But it's also a thing that people want to have exposure to, and it's interesting, and it's kind of a separate ecosystem from DeFi. So, the belief is that we're putting all the foundations in so that whatever the market conditions, we're going to be able to succeed.
Right. Absolutely. So would you guys say that you guys, like, your main focus is for like those people that just want to dip their toes into crypto but don't really know where or how to invest? So you guys are kind of, that's more or less what you guys are doing, is they invest into your token, and then I know you said that, but is that kind of your focus, your niche people that you want to target?
Yeah, I mean, I think the best way to answer this, right? So it goes back to our like short answer, yes, but basically it goes back to this original vision that we have of creating this kind of open access for everyone to DeFi. So CCF is like our first product, it's our primary product, and that is pretty much for people that just need to buy and hold the token. We do the work and they get returns from it. We do have like more active members that are kind of involved in farming themselves, and they provide suggestions, and we get some really good alpha actually from the community as well. So there is a slightly higher kind of level of engagement as well. So that's kind of like, I would guess, what you would say is like the base level retail product. I mean, in the future, like, we can talk a little bit about D3, but the idea there is that, we're trying to create this whole ecosystem where effectively there's going to be D3, which is like a kind of decentralized currency with staking, which you can kind of think of as like your savings account. There is cross-chain farming, obviously, that already exists, that is kind of like your retail asset management, and then something that you know, we're not going to talk too much about, but we're going to create other products in the future that are more like institutional grade as well, so that like whoever you are in the ecosystem, we have this full suite of DeFi products, whatever your level of risk appetite, whatever your level of experience, we're going to have something for you, and they're all going to be interlinked and kind of supporting each other. So that's kind of our like longer term vision as well. But yeah, to answer your original question, CCF is like trying to make it easy for anyone.
Scotty, you have any more questions, my friend?
I was just gonna go into the DeFi Alliance
D3?
thing. Yeah, you can go
Yeah,
ahead.
yeah. Real quickly, hey, Alex, I know you guys have been working on a lot of partnerships. Why don't you walk us through this DeFi 3.0 alliance that you guys have made, and maybe what other partnerships that you guys are working on?
Sure, good question. So I think, yeah, there's a few strands to that. So I think I'll talk about the alliance and the purpose behind that. So look, I think obviously, you know, farming as a service is new. It kind of burst on the scene a couple of months ago. You know, most of us kind of got exposure to it through you know, a handful of like particular early projects, and then kind of spun out after that. And then what we saw was the typical thing, right? Like a load of projects launched, some of them with good intentions, but they didn't have the kind of skill sets to get them off the ground. Some of them were just outright sort of scams and rugs. And you know, the dust has sort of settled, and there's this core group of us that have sort of been in touch. So, you know, like the guys at Refi and you know, AgFi and ACYC and some of these other guys that are listed on there. And we've all just kind of been communicating and, you know, trying to collaborate, because, you know, we use the term like FAS or like DeFi 3.0. You could kind of consider it a bit of a meme, right? We're still in this like very small subset of even DeFi, which is then a subset of crypto as a whole. But like, we're all massive believers in what we're doing. And we kind of believe that, you know, you don't need to be competing with each other at this level. Like, yes, we compete, right? But there's a big enough market share out there that, like any kind of traditional industry in, you know, outside the crypto world, there is going to be room for competition. And actually, there's certain areas in which you can collaborate to grow. So one of it was like, okay, you know, we're all on different chains. How can we look at like technical things that are going to be useful for us? That could be bridges, you know, that could be other products that we need. How can we kind of like create marks of you know, security and trust, so that people don't get rugged, and, you know, they can kind of trust the projects that they're investing in. And then obviously there's kind of, you know, we don't share all our secrets with each other, but there's just like a crazy amount of alpha that we can share, that like create more opportunities and, you know, really kind of help each other out as well. And then the final piece is about sort of like the education and what have you. So like, how can we collectively, without kind of bias to our own project, sort of spread the word and teach people about DeFi, teach them about DeFi 3 and kind of farming as a service. So we're like, okay, why don't we kind of formalize this and, you know, make a kind of serious structure in which we can, you know, have a core membership group with a proper charter, in which, you know, there are fees, sort of annual fees to be a part of it, that we can put into a pot to kind of look at security audits, look at technology innovation, you know, even launch like an accelerator to onboard companies that we think could, you know, help build the space. So that's kind of the intention behind it. So it kind of grew organically. We formalized it. You know, we want to grow it, and we've had a lot of interest in it. And, you know, there's sort of, I didn't quite expect the response that we got, but we had about another 10 companies kind of requesting to join. And so now what we're doing is like formalizing kind of our charter and our onboarding process, and, you know, speaking to these other projects and working out how to move forward with it. Because obviously one key thing is we need to make sure that anyone that joins is credible, because, you know, if we let someone join and they turn out to be kind of a bad actor, that's obviously bad on all of us. So yeah, look, that's really kind of the thinking behind that side of it. So I'd say that's like the kind of collaborative, non-profit, build the industry piece. I think then in terms of like, you know, what we're doing as CCF, there's like a whole other side of interesting partnerships as well, where people are starting to, you know, you've got a lot of projects out there with like interesting communities and products and building up big treasuries. And in some cases they're like, right, well, actually, you know, these guys manage, you know, funds effectively. Like maybe we should be speaking to them about how we should be allocating our treasury. So you know, when Bob's out there speaking to protocols and projects that we might invest in, we're having these conversations. And at this point, obviously, I can't kind of reveal the names until they're finalized, but we've got sort of 3 to 5 you know, different projects and in kind of various sectors that we're speaking to, either about collaborative partnerships and co-investments in one another, also, you know, companies that are looking at us to kind of help them manage their investments, and you know, that also then ties into what we're doing with D3, where we're trying to create effectively almost like a kind of bank or brokerage for the entire DeFi 3 space. So there's room to work with a lot of people. We're approaching people are approaching us. It's really annoying, so I love kind of sharing this news and I want to talk about them, but we, you know, we obviously need to kind of get them all closed off first. So yeah, there's that side of it. And then like the kind of third side of it is I think DeFi 3 is starting to get noticed, and so we're getting to have conversations with more interesting people talking about more interesting kind of, you know, investments into our business and into our token, and yeah, working them along, moving those along, and hope to close some of those off. And I'll tell you, you know, like I mean, I'm kind of just bullish on the whole sector as a whole, but if we can pull some of these off, like I think what's important for us is to show people how serious we are. You know, we're on Binance Smart Chain. Sometimes it's got a bit of a bad reputation. We want to build a DeFi ecosystem on there, and I think if we can cement some of these partnerships, people are going to start taking us very, very seriously. So yeah, covered a whole range of things there. So kind of hope that answers the question, but happy to kind of cover any specifics if needed.
Yeah, no, that's huge, man. I mean, you guys all working together, and it sounds like you guys are creating even more kind of a buzz, right? Newer projects maybe that kind of need your guidance are coming to you and saying, hey, you know, what should we be doing here, here, and here? And you're actually in the driver's seat there, where you can actually find some really solid brand new projects, get in early enough, and actually build up, you know, even more of a war chest for the CCF project, right?
Yeah, I mean, definitely. I think certainly with the alliance, it's going to be shared funds that's like non-profit that are used for like the collective good. I mean, I'm not going to lie, you know, obviously like getting people in your DMs, there's some really interesting people that like I'm going to speak to about other stuff as well, and it's a great business development tool. So you know, that's kind of like a side benefit for CCF for sure. But yeah, look, I think the thing is, you know, I said to him because I messaged Food Farmer because I was writing up the press release for the alliance, and I was like, oh, it'd be great if there was a quote from someone, you know, sort of speaking to the potential size of the industry. And he must have read my mind, because he put a tweet out sort of talking about how in his opinion, you know, there could be like 25 billion in fast projects by the end of the year. And I was like, okay, perfect, right? So got chatting to him, and you know, we were just talking about the size of the industry and the potential. So look, we're all sat here on like small market caps, and my dream actually is like that CCF does well, but it's like all the other DeFi protocols that came out before, you know, there's plenty of them that are like a billion market cap. There's room for all of us. So I think there's a really like exciting movement with some very cool people that are like really committed and hardworking, and you know, I want to see us all up there over the coming year.
No, absolutely, man. Really quickly, so I know you guys are doing partnerships and things like that. Talk to us about kind of, you know, are you guys working on any listings for exchanges? I mean, right now, still only PancakeSwap is where we can find and buy you guys. Are you guys working to try to get your token anywhere else that we're going to be able to buy?
So I think we do get this question quite a bit, and I think people need to really kind of understand how the listing works, and if it is actually going to be a benefit to the project, right? So
Sure.
with the way that the tokenomics and everything are set up, you know, it's very hard that if you get listed on a centralized exchange or something like that, it's very hard to get the benefit of the token and the reflections and
Yep.
stuff like that. So unless there's a way around it, unless there's an agreement with the actual centralized exchange where, you know, we could kind of implement that. And again, that's going to be a lot of work, and it requires a lot of kind of manpower and hours to kind of do that. Right now, that's not our main focus. Our main focus now is to kind of build these suite of products. You know, make CCF the best product it can be, make D3 the best product it can be. And yes, you know, PancakeSwap can be a bit of a pain. We are exploring other kind of DEX opportunities where we could potentially kind of move the liquidity to, so that we can kind of facilitate that kind of buying experience, so that it's a lot better for everyone. But right now, like I said, I don't think anyone in the fast space would want to get listed on Centralized exchange right now.
Yeah, no, I the reflection thing is a huge problem when it comes to it, because the exchanges are very, I mean, even getting some of these like XRP drops from, these exchanges just hold, and they don't really want to participate. So
Exactly.
I can imagine it's kind of a pain in the butt. You did say D3, so walk us through what is D3 protocol? What are we looking forward to here?
Let me say that, Chris.
Yeah, go for it.
So look, yeah, I think like, the story behind that is like, CCF, we love it and it's great. And like I said, it's kind of like the first product fitting into the vision that we had. So obviously as part of that, part of our higher risk bucket that Bob was talking about earlier is to invest in like, for example, own forks. And obviously there was this kind of crazy period where there's a load of them coming out, just like having battles to offer the highest APYs in like quadrillion% and crazy stuff like that, which is obviously not sustainable. So we, partly we were just kind of talking about that and, is there a way to solve that? And our dev Rago was like kind of looking at it from a technical point of view. And then the other part of it was tying into this vision that we had. So like you can look at like CCF is offering you buy the token and you get exposure to yield farming. Then we saw the whole kind of like fast movement growing. And so we're like, well, what if there was kind of a single source through which you could access returns from this whole movement, without buying one of the particular tokens and kind of hedging across it. And that was really like the birth of the idea for D3. So it goes back to what I was saying before, where, it's like CCF is kind of like the asset management piece. And basically what D3 is fundamentally like a decentralized currency for DeFi 3.0, which you can stake and generate returns. So, you can liken that to kind of currency and savings account. Now, how it works is it's originally it is an own fork. What Rago, our dev, has done is it's amazing actually, just from a sort of technical and kind of game theory perspective. And there's quite a lot of detail that I can't talk about it all now, and we're trying to make it as simple as possible to people. But basically what it is like it works in the same way that Ohm or Time will work. Now, if anyone's familiar with kind of the game theory behind that and the 3-3, the problem is like obviously people do sell and there's inflation and they dump their tokens because they want to get money out, and then there's panic and it can happen, right? So effectively what we've done is two things. One is we've put our 3 layer of tokenomics over it again, although we've actually done it in a slightly different way. So when people buy or sell DeFi, which is the native token on D3, basically 3% will go to a pool of BUSD rewards for people that are staking. And the idea behind that is it's additional game theory, because first off, if you sell, you pay tax. If you hold and stake, you're actually generating liquid BUSD that's giving you liquidity. So you don't necessarily need to unstake and sell to kind of, profit from the system. Another 3% goes to the treasury, which provides an extra layer of security for discretionary buyback. So if there's excessive inflation, we have additional funds to buy back without relying on, spending the whole treasury on it. The other part is just 3% on burning. And so when we launch, we're straight away burning 25% of the supply into a burn wallet, which will then be receiving all these additional burns going in. So it's not deflationary, but what it does is it controls inflation much more than say Ohm or Time or these other ones. And then the final piece is where kind of the fast piece comes in. And, this is like a part of the genius from the dev, so basically we can plug any smart contract in so that in that 3% tax, it will auto buy that token. So we're starting with CCF. So what that means is every time someone buys or sells DeFi, 3% of that will auto buy CCF tokens. Like, why are we doing that? It's like, are we just trying to pump our back? No, it's basically the treasury benefits, the D3 treasury benefits, because it's holding CCF to back the DeFi token. The treasury is receiving reflections, increasing the value of the treasury and kind of further supporting the DeFi token. So that's one thing. Then in terms of like, why does it benefit CCF? Well, it's additional game theory on ourselves, basically, because we're going to diamond hand it in the D3 treasury, because if we sell it, we drive the value of DeFi down and we drive the value of CCF down. If we hold it, we don't. So basically, we're effectively taking even more CCF out of circulation, and CCF's already deflationary. So it strengthens the entire ecosystem and bonds them together. Now that's the starting point. So what I mentioned is that any token that's on BSC, and we hope to bridge in the future, but to start with, any token that's on BSC, so there's other ones out there like MCC or ECC or whoever, right? We could plug their contract in and auto buy and acquire the asset into the D3 treasury. So what we're effectively doing is creating a basket of fast assets in the treasury backing the DeFi token. So someone might say, actually, I don't even want to get CCF because, that's one token and maybe, something could happen, whatever. I'd quite like to have exposure to a range of different fast assets. So maybe I just want to get some DeFi and stake it and kind of benefit from, that system. And then, anyone that knows how these work, and again, there's like some technicalities behind all this, obviously, but the way that it works is that the treasury will mint tokens and put them into supply, and they're effectively purchased by people minting, and that's how the APYs are generated on staking. So to start with, we're going to offer mints with like BUSD and BNB because we kind of need like some stability in the stable in the treasury, but we're also going to offer CCF mints as well. So again, people might say, well, actually, I'm going to allocate a portion of my CCF to mint some DeFi and then stake that. But then as we grow, what we're also doing is offering mints on other fast tokens. Again, starting with ones on Binance Smart Chain, but like some of the other kind of fast projects out there that we've mentioned, we're talking with them about bridging and the benefits for their holders as well of kind of coming over to BSC and the ability to offer mints on those tokens. So look, I mean, I've given a long answer because it is kind of a complex thing, and I think from a kind of language perspective, you've got to frame it in the right way, right? But if I kind of sum up very quickly and say this is like phase 2 of this kind of 4-pronged ecosystem I talked about earlier. D3 is your currency and savings. CCF is like your kind of asset management, and then a long time in the future we get into the institutional piece as well. So yeah, look, I hope that makes sense because it's not the simplest thing to explain, and it is a more kind of complex investment instrument. But yeah, that's kind of the top level view.
Is there a value for current CCF holders for D3? Is there like a snapshot where we're going to be maybe
yeah.
Or, walk us through that.
Yeah, cool. So the final thing I should say, we're trying to be very clear about this. Do not expect to get like a 1 billion% APY when we launch, because that's not what we're doing. We're prioritizing runway. Let's be honest, if you're getting hundreds or thousands of percent APY, it's kind of very good. So it will be very attractive, but it's not going to be something like really silly because we're prioritizing sustainability. But yeah, look, airdrop. I mean, I think, like I said, like all through like day one, right through to going to like V2. At one point our chart didn't look so great. Now we've kind of moved up again. The community's been there for us. And so in launching this, we definitely don't want to give the opinion, and I hope I've explained it, that like this isn't just us trying to launch another token and benefit in some way from it. Both are equally important, and we want our CCF community and loyal holders to be rewarded. So what we're doing is taking a snapshot right before launch. We can't obviously say when launch is because it's a fair sort of stealth launch on the public part of it, but it will be coming up in the next week or two. And we're putting an article out later this week to explain some more. So look, what that happens is 20,000 DeFi initial supply. Like I mentioned, 5,000 will be burnt, 10,000 will be put into a liquidity pool paired with BUSD, and the remaining 5,000 is given to CCF holders as an airdrop. So snapshot will be taken right before we launch, so no one's kind of missing out. There's no kind of gap between snapshot and launch. I mean, maybe a tiny gap, but basically we'll sort it out so it's as close as possible. And the way that it works is like very simply, it's proportional to your holdings of CCF, excluding the burn wallet and the LP. So if you take those out, let's say you have 1% of CCF supply, you're going to get basically 25% of the 0.25% of the initial DeFi supply. Although the slight tweak on the math is it actually ends up being like 0.33% once we've done that initial burn. So yeah, but again, it's simple. If you want some kind of exposure to DeFi and you're a CCF holder, you don't have to do anything. You just hold CCF, you'll get your airdrop. We're going to give instructions how to stake it, nice and easy. And then when we come to launching, we're doing, like I said, a sort of a stealth launch. We'll be posting the contract on the D3 protocol Twitter. That's the only place it's going to be listed. So don't take it from anywhere else, only on the Twitter. And then it's just like, it's like your usual free for all, but what we're doing is putting limits on how much one wallet can buy or mint on day one, which then scales up over the next 5 days to try and give everyone as much of a chance as possible. And Rago's put a lot of kind of measures in place to basically minimize bots and what have you. So yeah, that's kind of how that piece works.
No, that's great. Scott, do you have any more questions before maybe we open it up to the audience here?
No, I just had one comment of about the whole alliance thing. I think the four areas that you guys are focusing on, I think those are very good. They're very good things to focus on. I had the Medium article just pulled up. Between the technical standards, the security standards, investment alpha, and education and networking, I think those are really good things for an alliance of different DeFi protocols to focus on, especially security standards today, with all of the rugs and different issues with trusting projects and people and not doxing and all that kind of stuff. So I think if you guys can all get onto a standard system of how things should be and run, I think you guys are going to do quite well if you guys can do these things and show other projects this is how to run a successful project. So
well said, Scott. Yeah, why don't we if anyone in the audience has a question, just go ahead and raise your hand, we'll bring you up. Why we're waiting on some people to raise their hands, is there anything that we have not asked you guys about that you'd like to go over? Did we miss an area or something going on that you guys would like to talk about?
I think, just to kind of reiterate, we always do get the question when marketing. So maybe that's something that we can kind of touch on. I might just give a very brief explanation now. It's kind of going into a bit more detail, I suppose. So I think, the main thing to understand is marketing does not always have to be some kind of massive fireworks show. Marketing can be done very, very subtly, very classy, and it can yield a lot better results in the long term than a very quick kind of pump and dump. So our strategy, when we partnered with Gotcha Media right at the start of the project, has always been to set that long-term strategy and set the foundation in place so that we can build a really credible product and suite of products that not only retail investors can look at, but also institutional investors can look at. And I think that's the direction that we're going. We're doing a lot of marketing via networking as well, and that leads to a lot of opportunities down the line, and co-partnerships and co-branding and co-marketing. So when marketing, it's always happening. It's probably happening more behind the scenes than you see in front of the scenes. But Alex, why don't you kind of speak a little bit more to that?
Yeah. Sorry, it's me again. Kind of do tend to like talking about this, but Chris has summed it up nicely. We have a 3-phase plan. Phase 1 was build the community. Look, if you don't build a solid base organically, you're going to struggle. It's just facts. You can see it in any project. You want that well-educated community there and believe in what you're doing and effectively bought in for the long term. So we built that. We got sort of really, really decent core base, decent numbers in Telegram, good following on Twitter, and you build that up to move to phase 2. Phase 2 is like very much underway now, and it's not something you might see out in the open, but myself and Chris come from sort of traditional business development backgrounds, and that means a lot of networking with senior people in the industry, connecting with the right people. And why do we do that? Ultimately they do end up giving you exposure, and they have loyal followers that follow them in. So I guess I'm talking about maybe some of the the people on Twitter that are kind of credible. So not people that get paid to kind of just promote stuff. But in addition to that, it's like I mentioned earlier, speaking to the founders of other projects who have their own very loyal communities. And, that's the partnerships that I alluded to earlier, where we're talking about these guys to do things on a kind of financial level that are going to benefit both projects. But what comes with that is kind of co-marketing. So, we gain access to like 10,000 of their community. That's like, now they're kind of trusting their project, and they're saying that we're credible and they should check us out, and we're doing the same for them. And that's going to bring in not just like new buyers or kind of new community members, but people that are kind of well educated and ready to kind of buy in for the right reason. So that's one side of it. The other side of it is kind of connecting to people that could be, let's say like, VCs or advisors that are very well connected, and whether they put money in or connect us to people, that's like opening doors to us and tapping into their networks. And to me, that's like a lot more valuable long term than just kind of paying an agency or paying some influencers to do stuff. But like that does come in phase 3 effectively, which is kind of going to a wider audience. And so what we're trying to do there, and look, I'm not saying we might end up with videos on YouTube or whatever, right? That's fine, it's part of the game. But really, like for us, we'd like to be in the public eye, being taken seriously as a proper business and attracting a very, very high level of coverage and investor. So what's going on with that? Like, we're actually pulling the website together under the 3333 brand, which will then have the suite of products beneath it. So to start with D3 and CCF, so that it's all nicely tied together with a very, very professional website and kind of clear value proposition that people can understand. And then to support that, today actually we've just onboarded a web guy, or sort of marketing, like sort of full service marketing, but web's his thing. And so he's working on the website. We've also onboarded a content manager who's got an extensive background in all kind of media formats, so written, audio, and YouTube. And so with that comes an integrated kind of educational blog on the website. So not just us shilling ourselves, but providing value and education to the community, which goes alongside sort of a newsletter that we're launching, podcast, video, all of that kind of stuff. And what that means is that when we do start working with the marketing agency, because we will, we actually have a lot of credibility. So if they're reaching out to big publications or influencers or whatever, there's a lot of ammo to go with. And so the way that, just to cap that off, the way that we're going with that, we onboarded an advisor today who's actually someone that I've known for quite a few years and really been around a long time. Started at the Bitcoin Foundation back in 2014. She's like the total opposite of a DJ, like very serious, very well connected. Also happens to work for a traditional fintech marketing agency building out their blockchain arm. So we're not signed up with that agency, but like obviously it's an option. And she's going to kind of come in and advise us on best practices and what she's seen work and not work, and work towards that, so that like once D3 is launched, we're kind of ready to go, like full blast really. But I think we got a lot of mileage left still in the sort of phase 2 organic and BD stage.
No, that's great. We do have a couple quick questions. Alex Kuzi, you just want to click the green button on the top of Discord to come up and you can ask your question. And then any other people that have questions, please raise your hand so we can get you up here so we can get your questions answered. I know Alex and the team have gone through a lot of information and very well actually presented everything. So I know it's answered a lot of my stuff. What's going on, Alex? What do you got for the team? Oh, can't quite hear you, my friend. Maybe check your microphone. Why don't we just give him a second? Here we got another person coming up. Crypto Redneck. If you just click the green button on the top of Discord. There you are, my friend. You got a question for the team, Crypto?
Hey, yeah. So quick question, and as a disclaimer, understand you can't predict the future, but where do you see this project a year from now? Where do you hope to see this project a year from now? Just kind of paint a quick picture.
That's actually a really good question. It is something that we have discussed. Why don't we look at our aspirations first? And I think, we hope in a year's time, we will be in a position where we're consistently, generating a high level of yield for our token holders on CCF, and D3 is kind of, symbiotically working alongside it to provide value for D3 holders and CCF holders. And also we hope to have launched our third arm of 3333 by then as well, which caters a little bit more to kind of the institutional investor. So we're talking more along the lines of hedge funds who have a higher risk appetite for crypto, or smaller family offices who want that exposure to crypto and are willing to be kind of thought leaders in that space. We also want to be thought leaders within the fast space as well. So we want to keep innovating. We want to keep setting really high standards. And by no means is that not realistic. And I think that ties back into where we can be. We can be there because I think we've got the team in place. We've got a great community in place. We're taking all the necessary steps right now to grow the team and to grow our network so that, in a year's time, that vision can be fulfilled. So I think, we're very well placed at the moment, even though it's still very early doors. We're very well placed to kind of reach that vision that we've kind of set ourselves, and I don't think there's anything really kind of stopping us from doing that.
Crypto, did you have another question, my friend? Is that a good answer for you? Just need to unmute, my friend.
Oh, sorry. You answered it. Appreciate it, guys. Thanks.
Hey, man, thank you for your question. We don't really have any more questions, guys. I think you guys... Oh, Alex is back up. I think he might have figured out his mic. Or not. I don't know what's going on with Alex. Hold on, he's trying again. I'm trying to invite him up here. Alex, just click the green button again, please. Man, he's having a lot of trouble.
Alex, if you're having trouble, you can just jump in our TG, and we can, if you just put your question in there, we can kind of jump up and answer it as well if you want.
Great, cool. And then we got Este Richter. You have a question for the team?
Yeah, I do. Hey, I came in kind of late, so I'm sorry if it's a repeat, but okay. How do you think that a bear market will affect this project? I know we're just kind of getting started, and I'm not sure when that's going to happen, but the next 6 months, I guess. But how do you think that'll affect the project?
So I think the whole intention of our portfolio strategy. A bear market's going to affect every token. Let's not kind of mince words and be unrealistic. But I think at the end of the day, what we as a project try and do is to deliver yield to our token holders, right? So that's why the strategies that we deploy and our portfolio is very, very important. And that's why Bob talks so much about having that really rock solid base of stable coins, and having a really good strategy focused around them, because when the bear market does roll around, we can look to wind down our medium risk and higher risk positions into those more solid kind of stablecoin positions, and we can keep an eye on the yields and stuff that happen throughout the bear market and continuously move from stablecoin position to stablecoin position. And we can also look at hedging in terms of kind of delta neutral strategies as well if we need to. So we're not unrealistic in going to say it's not going to affect us, because it obviously will. But I think we've got a solid plan in place to execute should something like that arise. And I think that the team as well is also agile enough to kind of react to the market and react to kind of the space of yield farming as well, to move funds around in an agile manner to hopefully kind of counteract a lot of those negative impacts.
Great. Looking forward.
Yeah, I'd like to chime in here as well and kind of give it to you guys from the kind of the trenches. I think we're going to get a rally here shortly. There's a lot of extreme sentiment and on-chain data that's kind of hitting extreme levels here. I'm kind of more pessimistic than most on the crypto market as a whole for this year. I think we're kind of in this crab market with a downward bias, and yield farming by its definition should outperform in a bear market if you do it right. And a lot of the strategies that we're going to be implementing are going to be designed to not be affected by price. So it's going to be delta neutral or stables or pseudo delta neutral. Or if we do take a position in something, we will be hedging it and putting safety measures in place or generating as much yield on it as we can to counteract any negative price action. So I've got a couple little surprises kind of up my sleeve. I'm actually working with a couple protocols that are designing products for us as we speak that are going to do exactly that, is to take, our goal is to suck as much volatility out of our portfolio as possible. So I can't really speak on it, but you'll be seeing some new products come to the market with us being kind of the first ones to get it.
Great. Kel, did you have a question for the team?
Testing 1, 2, 3. Yes, sir. Yes, I did. Regarding to the question I was just going to ask, it was kind of somewhat just answered. However, I had a slight tweak to that question. And that's basically these gentlemen are the ones who are responsible for allocating the funds to the different farms and so forth. Maybe I missed it already, but the question was here is, what experience do yourselves have in the crypto market, investing and allocating these funds to get return for the investors and the people who are holding on to these to this coin and to this asset? And that's basically my question. Thank you very much.
Sure. So I think with I'll let kind of Bob speak to his extent as well. We've kind of had a lot of exposure to crypto, and with anything in crypto, everyone has to start somewhere, right? I started about 4 years ago. Whenever I dive into something, I do dive in kind of head first, and I apply myself 100%. So I had a very steep learning curve. I learned very quickly. I'm not going to sit here and say I know everything. I don't think anyone, in crypto knows everything to do with yield farming or DeFi. But we have a very good sense of what is going on, what's trending. We've invested personally as well within DeFi over the years. I'm more than happy to say, I've seen my number of scams over the years. So now I know what to look out for. I've helped others within the space, within my kind of close circle of friends, kind of get involved in DeFi and do very well. Bob, do you want to kind of speak to for yourself as well on this one?
Yeah, I just hold on here. I just want to reiterate, I've got 30 plus years in traditional finance. I've managed hundreds of millions of dollars in for high net worth individuals, institutions. I currently manage 3 real estate funds that have over $300 million in assets. And I got into crypto about 2017, and then really took a deep plunge into DeFi. I decided there was too much in crypto, and I just wanted to focus on DeFi. And so I did a deep dive into DeFi and try to learn as much as I can and connect with as many people as I could. And I've kind of built up a really nice network that constantly generates alpha. And I try to apply my traditional finance training to it and layer in risk management, absolute return, risk adjusted return, and try to kind of do it in a professional, do DeFi and farming in a professional, institutional way.
Did that answer your question, Kel? You good? You have another one, or
No, that was beautiful. I like the white collar explanation to that situation. That's perfect. Thank you very much, Sensei. And if you guys could shout out where we could find you on social media and keep up to date with your progress and so forth, that'd be brilliant. That's all for me. Thank you very much.
thank you,
Yeah.
Kel.
Absolutely. We you can find us on our kind of main Twitter. That's cross-chain farm. We can link it with Sensei and put it in the chat a bit later on. But you can follow Alex. Alex, what can you plug your Twitter again?
Same as the name on here, Alex. A lot of bullish posts about CCF, but yeah, I'll make sure that all the links are posted in here via Sensei in due course.
Beautiful. And then also too, we have quarantine, and actually too, I've been talking to these guys. They need to get a Discord going too. I think a Discord would be a really great way to actually build more of an organic reach in the crypto communities. So
we do have a Discord. You
guys do? Oh, it's not
we
linked
need
on
to
the-
set out. We're a bit like, I think like you've maybe told, we've been around a while, we're a bit older.
Yeah.
We're trying to get to grips with all the technology, so many channels going on. But no, we do have one set up. We've got a couple of our community managers sort of lining it up, and to be honest, we just
Awesome.
need to get it going a little bit more.
No worries, man. All right, we got Quarantine up here. Quarantine, you have a question for the team?
Yes, hello, can you hear me properly?
We can. How you doing, sir?
Alright, good. I have a question about cross-chain farming. If I hold a token, how much APR would I get? Can you estimate it?
Yeah, so actually, like, it's a good question, and that we've got a dashboard, and we want to have all this information on the dashboard, and we will do. The dev Rago and his team have been busy with D3, but once that's out, we'll put some attention on that, so you can have all the information in one place. Again, actually, it links through to our kind of social stuff. So we put an article out quite recently that was kind of an explainer of farming as a service, but kind of through the lens of cross-chain farming. And one of the things that we did there was make some calculations, actually. So let me just quickly pull up my Twitter here and find the thing, because I think so. The first month is sort of full operations in December. Just in reflections, I think it worked out about 3% ROI, on your holdings. So that's that, and I guess like we would foresee that continuing, depending on volume and so on and so forth. But then the other thing that's kind of interesting is like what you've got to bear in mind is the token's deflationary. So that means that you're actually kind of but just by holding, you're increasing your share of a decreasing supply, basically. And it's a little bit misleading, this stat. We burnt like 18% in the first month, but the reason for that is like when we launched in V2, we had to increase the supply to, so our original supply was 1 trillion in V1. Some people might know that there was like an inflationary bug, so we ended up at about 1.7 trillion. So we did a one-to-one airdrop and then burnt 300 billion into a burn wallet. And the reason we did that is burn wallet then will receive reflections as well, which actually increases deflation on top of the 3% tax that is burning as well. So I'd actually foresee moving forward, we're not going to burn 18% a month.
Like
obviously, I think it would be more like 2 or 3%,
piece,
depending on
and
volume.
Basically, what D3 is fundamentally
so that's
like
that. And then like look, in terms of like when we start
DeFi 3.0.
distributing farming profits, like honestly, that's a little bit hard to say because it's variable. Like what we can say is that in the first month of farming, we generated a 32% ROI. To be honest, that was in spite of the market being quite flat and a fairly passive strategy from us while we were getting set up. Now we've got Bob on board and a bit more set up, and Chris are looking at every day by day, like no promises obviously, but we're expecting to kind of massively outperform that, so that when it comes to distributing profits to holders, there's a substantial amount. And the final piece to say on that is that like, it's about compounding the treasury and growing it, right? So we do want to reward our holders and we will, but we've got to make a careful decision between like how much is it worth to give back to holders now, or how much can we give them if we compound some of the profits and essentially make bigger payouts later. We're kind of carefully calculating that, and that's why we're doing the first distribution and anticipate it at the end of February, and then everyone should have a clearer idea of that look. Is that okay? Does that answer the question?
Yeah. Are you good, Quarantine?
How are the distributions distributed? How are the rewards paid?
Sure. So the reflections just like basically automatically go onto your balance. So every time there's a buy or sell, like unfortunately BSC scan is not great. So you actually, and again, this is why we're trying to get it on the dashboard, and we will have it on the dashboard. But basically, if you check your address one day, you'll see one number. If you check it the next day, that number will have gone up. You don't have to do anything. I mean, that's what I'm saying. It's like you just hold the token, you don't worry about it. Like when we do the distributions of farming profits, we are looking to make it fair. So we're gonna like basically the way that we work is we like to evaluate everything and then present clear information to people that's accurate and confirmed. So what we're going to do is by the end of the month come out with a exact strategy for how we're going to do the farming profit distributions, but likely what it will involve is a snapshot at the beginning of the month and a snapshot at the end of the month, and along the lines of saying, look, obviously people are allowed to sell, but like the people that will qualify will have held, something like 75% of their kind of beginning of the month holdings they'll still have at the end of the month, at which point all that will happen is that we will decide how much we're distributing to holders from the fund and from the farming fund, and we will airdrop it on a proportional basis into your wallet. So again, there's no like annoying claims or gas fees or anything. Like we're literally trying to make it so you don't really have to do anything, and we kind of do it for you, and then you just get stuff in your wallet and everyone's happy.
The airdrop will be the token itself, right?
Sorry, I missed that.
The airdrop will be in cross-chain farming token.
No. So again, like what we're going to do there. So the reflections that you get are in the CCF token. Yes, the farming profits are going to be distributed in a more traditional coin, which like we're asking the community what they prefer. We've been talking about it, but basically it will either be BUSD or BNB.
Right. Perfect. Thank you.
No problem.
Thanks, man. Appreciate you. Steve, I'm going to unmute you right now. You had a little bit of feedback, but I'm unmuting you. Please go ahead and ask your question, Steve. We can hear you, Steve. What's up?
Right.
Yep.
Can you hear me? Can you hear me
doing?
now? You can hear me? Right. Great. Okay. Cheers. Yeah. A similar. You answered some of it from Quarantine's question. So I was wondering, is the once your decisions are made about where you're going to be farming, and that's all pretty secret, how much of is the entirety of the rest of the process decentralized? So is it fully automated from the point of your investment to right through to the reflections? And is that done on a one-to-one basis? So, for example, if you mentioned a 32% profit, so would that give a 32% reflection to the investors?
No,
And
so
if it was 200,
that's not how it would work. So if you look at any kind of traditional hedge funds or any kind of family office or whatever, they're not going to distribute the entire profit, because that will just leave them with the same AUM that they had at the start of the year, and they're having to kind of start from scratch, right? So what we do is we look at the amount of profit that we make. We then say, okay, fine, what amount of profit are we comfortable distributing to the community so that we still got enough in reserve to compound our treasury, reinvest, and grow the fund even more? And then we look at that based on our expertise and our previous experience, and then we distribute that to the holders.
Yeah, I mean, I think I get what your question is, and I think
Yeah.
look, I think
So
basically,
that's all going to be transparent. Will that be transparent?
yeah.
I
No,
mean, I'm getting
Absolutely.
it's not going to be visible on the blockchain, is it? So,
well, no. So the way it
so
will,
it's a
so
question.
to a degree, it will be like because basically you can see all of our farming wallets on the dashboard, except the one that we need to integrate is Terra at the moment because it's not an EVM, so it's slightly different. But like fundamentally, you can see every position that we are taking. It's not like I wouldn't say like the process itself is like in some way automated because like we as humans as kind of like the group of like farming experts, I mean I say we, I mean actually Krish and Bob, basically they need to make kind of really proactive decisions to stay on top of everything. But in terms of like then when those transactions are processed, like you'll be able to see like where we're moving our funds. Actually now that Bob's on board, like we want to be transparent and but like Krish mentioned, like we're not believers in like telling everyone really directly every single position that we're taking, because then you know it effectively reduces the effectiveness of our strategy, the API. But we're giving enough information that if people want to look, they can kind of probably work it out.
Right. So it's a difficult balance between keeping it to yourself and being able to let people know where you're farming on a dashboard.
Absolutely. I mean,
if they can see for sure. It's just, we don't tell them like necessarily like step by step how to do it, but in terms of where the transactions are going, like if someone wanted to spend the time to go through all the transactions, they could like work it all out and it's all there. So yeah, I mean that's the beauty of the blockchain, right? It's like you can't really hide anything because it's all literally there. So
you can't hide anything. Yep, I have members that track my wallet and figure out what I'm buying. It's pretty funny before I post it. So
I think that's another thing to kind of also remember as well, right? It's that, you know, like we've always said, we are aiming to run this project and CCF in particular in this case like a proper, you know, proper business. And you know, no self-respecting hedge fund. If you look at someone like Rentec, I was kind of talking to Alex and Bob about this previously, but if you look at someone like Rentec, they're not going to come out and tell everyone this is our strategy. You know, that's not how they've made, you know, 76% something odd, you know, year on year or something return, and which is amazing for a hedge fund in TradFi. You know, it would make really, really bad business sense to be announcing that, to be honest. So that's why we don't do it. We do kind of give out cryptic clues because we are big believers in doing your own research and not kind of spoon feeding people because they're not going to learn that way. So, you know, Bob and I will kind of put out these kind of cryptic messages every now and then. So if you want to kind of do your own research, follow us, more than happy for you guys to do so.
I think there's actually an educational point on that as well, because I think one of the is like, you know, some people might like hold, you know, everything that Bob or Chris says up and think, oh, I can make money on this myself too. And this happened on some other projects. And basically, you know, they announce what they're doing. A load of people jump in, but they don't know the nuances and when to take profit. So to a degree, we you know, we kind of want to avoid sort of saying, hey, we've done this, you know, you can go and do this and it's all really easy. Like what we're going to do is kind of take a more educational approach and say, look, like starting at the bottom, let's teach you about, you know, how DeFi works and like some of the basics and how liquidity pools work and, you know, some basic staking and single-sided staking and what like impermanent loss looks like. And, you know, actually so that like at some point, I guess a nice thing would be, well, I guess I wouldn't like them to sell, but like, let's say someone's like one day, actually, maybe I can go and do some of this. You know, I think for us that would be a win as well. But yeah, you know, you got to be careful because we're transparent. We don't hide anything. I think, you know, we tried to demonstrate that all the stuff you can see on the blockchain, but we're also trying to kind of protect people and educate them as well and make sure that people don't make mistakes. And, you know, that's part of, you know, our ethos too.
Man, you guys have given us a detailed look inside of cross-chain farming and D3 that's coming up. Since there's no more questions, guys, you know, is there anything you guys left out maybe? I know it's a lot of information we just took in. Anything at all you'd like to say in closing before we end today?
Yeah, man, I think I'd like to sort of personally thank you actually, because obviously we've been in touch and you know, sort of chatting, and yeah, you know, as and when things have come up, you've had really open lines of communication, and yeah, definitely appreciate that. Appreciate the chance to come on and speak to your community again now that, you know, farming as a service is a little bit more well known. So yeah, thanks to you and thanks to your community and everyone that listened in, and you know, hopefully you learned something. If anything wasn't clear, hit us up, and you know, we're always around to, yeah, appreciate it.
It sounds like it's a great time to get into CCF, you know, just in time for this airdrop coming up. And you know, I know your project is going to be successful. You guys have an amazing team. You guys have, like you said, well communication, and we look forward to having you guys back in, you know, a month or two when you got more updates about, you know, everything else that's going on. So I wish you and your project all the success in the world, and we'll be here to support you all the way through.
Thanks very much, Sensei. We really do appreciate that.
Hey guys, thank you so much for your time. Thank you guys for listening. You know, go check these guys out online, their Twitter, their Discord that's going to be open here soon. We'd like to see you guys in there. And thank you so much. And you guys have a great 2022. Bye, guys.
See you guys.